Hello and welcome to today's webinar. My name is Nathan Batcher and I'll be your host for today. So before I begin, I'm just going to read through this disclaimer. Please feel free to read along as well. Beyond Trader LLC is strictly a research publishing firm. The information we publish is based on our opinions plus our quantitative models, statistical and financial data, and independent research. This service is not registered with any financial regulatory agency such as the SEC or any other organization or governmental body. By using our platform or our services, you acknowledge that we do not provide personalized recommendation or advice. Alternative asset classes are volatile investments and carry significant risk. Please do your own research before making any financial decisions. Okay, so on today's agenda, I'll be discussing the structure of the market. I'll also be giving a brief market overview. I'll be looking at Bitcoin and Ethereum from an on-chain perspective. I'll be spending quite a lot of time on the technicals today because it's quite a topical and interesting things going on in the chart for Bitcoin at the moment. So I think people might want me to spend a little bit longer on that. I'll also be doing the Beyond signal review and I'll be doing the Q&A session at the end. Okay, so we've just had the latest last week, I guess, in terms of the Federal Reserve speakers coming out. So I think we've got to pay special attention after this non-farm payrolls job report, which is coming up on Friday. I think this is going to be very important for setting the market tone over the next couple of days. And after we get the jobs report next Friday, I think in the following days to that, or I guess in the aftermath, if we want to use a better word, we're going to be seeing several Fed speakers coming out, and I believe that's going to set the tone for September and the potential for a rate cut and just how steep and severe that's going to be. So I believe next week maybe we'll see some positioning by the market, but come Friday and the week after, then we'll really start to see the market moves. I think the election is going to start to heat up as we start to see more and more election news and more focus on that coming up as we move in towards the election time. It's creeping up very quickly. And also leverage traders are having a hard time at the moment. Obviously, anybody who's trying to go long and hold on to positions and people are going to go short, so they're getting trapped out on both sides. So at the moment, it does appear like the market is taking out these leverage traders. And also the crypto market has been very highly correlated to stocks recently. So I would keep an eye on that dynamic. If the S&P keeps going higher, then I think that'll be a good sign for Bitcoin. Something that's not a great sign, and that's Vanguard. At the moment, we're looking at a very negative close. We haven't seen any change. Hopefully, we don't see any red appear on the weekly close. At the moment, we're still getting the amber alert. Is it unusual for the amber alert to turn to green? No, it's not unusual at all for the amber alert to turn to green. At some point, we have seen that happen. So as we go into that weekly close, it's not definitive that the next week we could see things changing around. But at the moment, I think we are looking at a bit of a negative close on the weekly time frame, and that should be respected. Looking at the long to short ratio, at the moment, it's a bit disappointing. So when we had the previous rally towards 62,000, a lot of the market was starting to short, and I thought maybe we can continue higher to 66,000. But recently, as the long bias came in, and you could see so did the drop in the price. So ideally, we want this to stop creeping higher and to keep consistently lower. We want traders to short the rallies. In other words, we want the opposite to happen. So we really want these retail traders to start to really get short the market. And then I believe we can start to move higher. But at the moment, that's not a great sign. And Beyond Atlas, it's not really picking a definitive direction at the moment, so there's not a lot to see there. But until we get underneath 100, then we don't really have any strong buy signal there at the moment, or any buy signal at all. If we're having a look at positioning data and leverage traders, at the moment there's a short bias in the market, so that's not really a great sign, I would say. And I think we need to pay attention to that. So I think at the moment we would like to see a rebound. So if traders can continue to pile on the shorts in the early part of the week, we can see the liquidations above to 62,000. That would be a great sign. it would be even better if we could stay above 62,000, and I'll discuss more about that later on in terms of the technicals. Something that is a bit worrying in terms of the liquidations, and we can see it sitting pretty close to the price. So if we move underneath the lows of this week, there's a tempting lot of liquidations there. So there is a scenario in play where we could go down towards 55,000 if we wipe out those liquidations. So keep a close eye on the technicals, and I'll discuss them more later on. But alternatively, if we move past 62,000, then there's a big block around 64 to 65,000 that we can see liquidated. So it really is kind of even Stevens at the moment in terms of where the market's going. If we have a look at the positioning data, something that I've been keeping an eye on as professional traders, if we have a look at other reportables, they are, i.e., professional futures traders. And these professional futures traders, I think about 2 weeks ago, they went their most long ever Bitcoin. I think there was around 2,500 longs initiated when Bitcoin crashed towards 50,000. So I've been keeping a close watch on them, because the other reportables or professional traders, ideally and normally they're right, and you want to watch what they're doing. So they've been reducing some of their exposure, but not by much. So by my calculations, there's still around 2,000 of these traders are holding longs, probably from around the 50 to 54,000 region. So that means that they're still expecting prices to go higher, which I think is very encouraging. So that's something that I pay close attention to when I watch this metric. And also the fear and greed index, I think it's suitably low for a rebound. And I'll show you some other metrics later on which look pretty good in terms of a market rebound soon. So I think we've been as low as around 17 or 18, I think, this year. So if we move underneath or towards that level, then that's normally the rebound sign. But at the moment, it's pretty low. So we're definitely in the kind of scope of when we could start to see a market rebound. Something that is very encouraging is that the percentage of total supply and profit is moved towards 78.5%. I think that's a great sign. So we're starting to see traders less and less in profit. So ideally, this would dip even lower, but the price wouldn't move that much, and that would be traders kind of assuming and taking losses as well. So I'd like to see this move towards the 50% level, but Bitcoin remain around current levels. I don't know if that's going to happen, or if these traders have been suitably wiped out and we've got enough to rally. But I definitely see, or like to see, this metric get close to the October 2023 levels. If we have a look at daily active address divergence, I think it's a great sign that we've got lots of positive flows coming in the market. Look at this positive divergence that's building. I think that's a great sign, and it's extending up to around about 60,000. And I think this is a positive sign. If we have a look at whale activity, and another positive sign is shark addresses. If you see, they've had one of the sharpest ramps higher of the year. I think we're near um, very, very high levels of holding, potentially near all-time high levels for shark addresses who've suddenly started to accumulate Bitcoins. I think that's a really good sign. Mid-tier whales started to move higher, but they haven't done much. And the smallest set of retail traders have been selling or stabilizing. But I really like the way that these shark addresses have started to aggressively accumulate. I think that's a positive sign, especially on price dips. And something else that is good is that sentiment has moved into quite negative territory. So there is some indications that we could get a rebound next week. And if you notice that when we're kind of underneath this zero line, some of the best moves higher happen. So if we can consistently keep the retail trade, I guess, in the negative scope of the mindset, then we could hopefully have a rebound next week. Moving on to Ethereum, and we're getting lots of these positive flows in the market. And again, we've got some nice divergence extending back to the highs. So I think there's a strong case for a rebound in Ethereum at some point. And I guess by my calculations, I think that that rebound starts when we start to stabilize above around 2,800, something like that. Having a look at whale activity is very disappointing, which is pretty negative for Ethereum, and even retail are losing their kind of interest. So I think we need to see whales starting to move on this. Again, we've got to factor in what's happening with the ETFs. Maybe a lot of traders are going to start to play the ETF after the grayscale selling finishes. But at the moment, it doesn't look too encouraging. And I think, again, it's not that fantastic based on what I'm seeing. But something that does look very good is that sentiment is starting to crash, according to weighted social sentiment data. So heavily negative, and that's a good sign that there could be some type of rebound, and we're approaching a decent bottom in the market for Ethereum. Having along to the technicals, and I want to point your attention to the pivot point on the monthly time frame. And I think this is something of a lot of interest for me because we've been down to test that pivot. So next week, keep a close eye on that 57,870 level. We've been down to test it today. We've rebounded. If we continue to move higher from here and get above 60,000, then maybe the worst is over. But the bad part will be if we weaken underneath there Monday, Tuesday, then there's a strong chance we're going to see 55,000 tested. The monthly pivots, if you have a look, it looks pretty bad in terms of if we stay underneath there and move towards the S1, it's way down below at 50,000. Or above is very encouraging. If we start to hold above the pivot, then the R1 sits in at around 66,000. So that's very good. And obviously, the best case scenario when we play these pivot points is that if you are bullish, we rebound from the pivot point, and we do the clean sweep. We move through the R1, R2, R3, and that would take Bitcoin to around 83,000 by the end of the month, which would be a great scenario. Not so great if we ended up at S3, but I think we need to see something pretty bearish for that to happen. Having looking at the technicals for Bitcoin, and the Williams alligator indicator is still flatlining, although we're underneath the price at the moment. The worrying part for traders will be if the green line starts to cross underneath and we get a sell signal on the weekly. That is something that could easily trigger a move towards the kind of 38, 36,000 region. So that's what we don't want to happen. So ideally, we need to get above the red line and the green line start to crossing, and that will happen around about the 62,000 level. So that's the kind of this is what we need to see next week, and we don't want to see high momentum selling. High momentum selling means where the selling just continues and continues. There's no stabilization or accumulation happening, but at the moment there's no crossover. And something else to kind of worry you in terms of a deeper drop on high momentum is that the Ichimoku cloud on the weekly, although we're not getting a sell signal with the lagging line or the green line crossing underneath the base and conversion line, the cloud sits in at around maybe 54, 55,000. So that is a bona fide support zone coming up that we must bounce from, but hopefully we don't get that low in the coming days. Something else to look out for, I guess, is the daily time frame, and we can see the lagging lines kind of in the no man's zone at the moment, and so is the price. It's kind of sandwiched between the cloud and the base and the conversion line, so there is really no trend on the daily time frame. In order for a strong trend to form, we need to move above 62,000, or for a strong bearish trend to form, we really need to start to fall beneath 57,000 and go towards 56,000, and then the kind of the sell mode is on. If we have a look at something else interesting, and we can see this key trend line coming in, and that's fitted in at around 55,000, hence why I say watch out for the cloud. And then it's kind of exponential to the upside. If we bounce from here and find support, you'll see that top yellow trend line. You can't see where it extends to, but it extends towards around about 100,000, and it's very symmetrical compared to the lower trend line. So there's that possibility that we could see a play. The worrying part would be if we broke underneath the trend line, and then 36,000 support, easily test the yearly pivot point around 36,000, and then that kind of 33 to 36,000 area is kind of the last line of defense for Bitcoin. So we really want to avoid that scenario, and we need to start to bounce next week. Having a look at Ethereum, and it's pretty bearish. You can see on the weekly time frame there's a strong sell signal happening, and there's no negation of that at the moment. The worrying part would be if we broke underneath the 200-week moving average. So what we really need to do is to get back inside this box, stabilize above this green line, get out of the technical danger zone above 3,000, and then we can start to move higher. But at the moment, there's a bona fide sell signal on the weekly time frame, and that should be a concern for a lot of people, because if momentum picks up, then there's a strong chance that we're going sub $2,000. Having a look on the Ichimoku indicator, and it's similarly bearish, showing that there's very little support underneath the 200-week moving average. So we really need to bounce over the coming days to avoid something very, very bad in Ethereum, and hopefully the on-chain signs that we're seeing are going to kind of point to that. In terms of the medium and long-term signals, I'm kind of focused on holding these positions because I've got a strong feeling that we're going to go back towards new all-time high for Bitcoin. and eventually the market's going to recover. Ethereum, it doesn't look that great at the moment, but things like Chainlink and Ripple, I'm still very positive on. So I think those trades will eventually prove correct. And I think Solana is something that we could easily add in future if the price action looks correct. On the Q&A, I have a question. What do you attribute to the big sell-off in altcoins too? I think basically the market is so heavily driven by Bitcoin at the moment. I think there's the situation with the Japanese yen has not helped with global liquidity. I think, uh, again, that's a big factor. There's no buzz coming from Ethereum at the moment. After Ethereum rallies after Bitcoin, that's typically the moment when altcoins start to rally. So as both of those things aren't happening at the moment, that's probably a big factor. And there's no sector-wide buzz at the moment in the crypto. So before maybe we saw DeFi rallies or gaming rallies, but there's really nothing like that going on at the moment. So a little bit negative, I think, until we see Bitcoin kind of leading the race. Okay, so I hope you enjoyed today's webinar. I look forward to seeing you again next week. And if you have any questions, please feel free to reach me on Discord or email. Thank you very much, and I'll see you soon.